Hi there, I have a question for you. How cheap you think NIO is? Because as you can see, the stock price has declined by over 85% from its last peak, the highest peak. And now the market cap is around 14.8 billion. Now, we may also know that NIO has no profits. This is not a profitable business. And how can you value this business if they have no profits? You might look at the revenue, which keeps growing. But tell me how you value this business. How you assess if this stock is cheap or overvalued. Because if you look only at the stock price, that has declined by over 85%, and you think now it's cheap, then you might be wrong. Or not. The stock price may rebound back to $50 or even more. The market cap can go to 100 billion. Because as you know, this is a Chinese company, they operate in China, and also they want to expand internationally, and the market cap may go to 100 billion if they can succeed. But don't forget, there is also competition, and you might want to value this business by looking at the other players, what they're doing. For instance, if you look at the China market, the EV market in China, you can see that there are more companies. In this table you can see the main public companies, such as BYD, Li Auto, NIO, Xiaopan, and Geely Automobile. As you can see, NIO has about 17 billion in market cap, and compared to BYD, which has over 70 billion, you might say that NIO is cheap at the current level. And also Li Auto has over 40 billion in market cap. And now it seems that NIO and Xiaopan are the cheapest, and also Geely. Of course, you don't compare only on their market cap. You also have to look at their revenue, at their cars, their models, and how much they sell. And don't forget that there are other players that want to go public, such as Aways and Hozan. Now, if you are asking yourself how much they charge for their cars, you can see in this table some of their models, how much they charge. And as you can see, BYD is charging of about $20,000 for their model Dolphin, BYD Dolphin. And NIO is charging over 50,000. Of course, they offer more features, the quality may be higher, and maybe NIO is a better car than BYD. I mean, the cars from NIO may be better than BYD, and that's why they're charging this high price. But if you research more about BYD, what they're doing, and you look at this model, BYD Dolphin, you can see that it looks quite nice. A car that costs of about $20,000, to look in this way, you might say this is a bargain. But it depends on your tastes. Now, as you've seen their prices and their market caps, there is another question you have to ask yourself. And that is, which of these companies are profitable? Well, let's start with NIO. If you look at their past performance, you can see that they have no profits, only losses. Of course, they keep investing in their business to come up with new technologies and expand their business. And that's why they have huge losses. But at the end, what matters and what will make the stock price to go up is their profits. How profitable a business can become. Not only the growth in the revenue, but also the growth in their profits. So you have to be aware of their profitability. So NIO is not a profitable company yet. Now, let's look at Li Auto, another Chinese company which manufactures electric cars. And as you can see, they also have no profits, only losses for the last 5 years. Another competitor is Xiaopan. Also, the stock price has declined a lot, by over 60%. And if you look at their past performance, you can see that they have no profits. But of course, the revenue keeps going up, and they keep investing in their business, which might produce some profits in the future. That's why, if those companies especially those that are unprofitable, if they succeed to deliver some profits after 5 years or 3 years, then the reward may be quite high. You might have something like this. Of course, if this performance happens again, then your return will be quite high. Imagine, you invest 10,000 in NIO now, and you might have over 170,000. And that will be great. Now, the other competitors are BYD, and if you look at their past performance, you can see that they succeeded to make a profit while they are investing in their business to come up with new technologies. And this is quite important. A business that can be profitable while they keep investing in their business and also to expand internationally. So this is a great example, BYD. If NIO can deliver the same performance as BYD does, then you can say that the stock price of NIO will rebound. But if they don't deliver some profits, then you can expect too much from NIO. And the other competitor is Geely, which also has declined by over 70% or even more than 70%. And if you look at their past performance, you can see that they have some profits. Of course, the revenue doesn't grow so much, but they're able to make some profits. So as you can see from this table, only two companies are profitable, BYD and Geely. Now another question you should ask is, who is the leader in China selling electric cars? Well, if you look at the top selling electric vehicles in China from January to September 2023, you can see that BYD is in the first place, followed by Tesla, Ion, and other Chinese companies, and of course Li Auto and Geely. But I don't see any NIO cars. Why that? Because as you saw, they keep developing new technologies, and the cars are quite attractive to investors. I don't know if they own a NIO car, but for sure they own this company, NIO. So when you look at the competition in the top selling electric vehicles, NIO is not here. And you can also see the top auto brands. BYD is in first place, followed by Tesla, Ion, HGMW, and Li Auto. But there is no NIO here. Of course, you might say that this is a great opportunity for NIO to gain some market share. And if they succeed, then the upside can be quite huge. Imagine NIO in the third place or second place. That can also happen if they keep developing their cars and lower their prices. But so far, as you've seen, their prices are quite high compared to BYD and other competitors. In fact, NIO is the most expensive based on this table. Now, you might say that this is a luxury car, but think about how much they can gain in market share. China has an advantage for sure for offering low prices. But I don't know if they're able to compete in the luxury industry. I mean luxury cars. Because you have other competitors from Europe. So this might be a problem. Now, the price is just one criteria when you want to buy a car. The other things you want to pay attention to, such as their range, how much an electric vehicle can last. Because as you can see, the average electric vehicle lasts of about 300 kilometers. And a median gas car lasts over 600 kilometers. However, EV cars keep improving. As you can see, since 2017, the average electric vehicle range has increased by 44%. If that happens again in the next 5 years, or it may even double, then EV cars will surpass gas cars. This will happen for sure, there is no doubt, because there are more companies that are investing in new technologies, and they'll come up with something new. Now, another thing you have to know about NIO is that they keep investing in new technologies. Self-driving, batteries, and so on. And this may be a huge opportunity for NIO. They may not be able to charge the lowest price, but if they can come up with something new, I mean something related to self-driving or batteries, then NIO may possess a great advantage compared to the other competitors. So NIO may not be the cheapest car and the most valuable right now, but they may become in the future. And if they can do that and also become profitable, then you can expect a good return from the current level of $8 or the current market cap of about 13 billion. By the way, it's better to focus on the market cap because as they keep issuing more shares, the price won't be a good indicator. As they have no profits, they will need more money to fund their operations. That's why we need investors to fund unprofitable businesses, which might succeed in the future and then can deliver a great return to investors. But if they don't, then the return won't be that great. A huge decline of 86% or even more. That's why you have to be very careful when you invest in unprofitable businesses, and especially when there is huge competition. These are only the public companies, but there are others that may come. And you may also want to invest in the new IPOs that can become profitable. That can also happen. But be aware of the competition, especially BYD and Tesla. And if you have other questions, please let me know in the comments.